Yes, what's good, my people? It's your boy Daniel Effects here. Welcome back to the channel. Today I'm going to be doing a little trade breakdown of this NasDaq position that I took right here. It was a 2.5 RR position. However, I actually got break even on this. I'm going to explain exactly what I was doing at the time, what my thought process was, why I got break even instead of making a full profit, etc., etc. But I just want to give you guys some insights. Hopefully, you can take away some value from this and actually learn and understand my thought process in terms of what I was doing. Before I get into why I held the position, let me actually break down position for you first and foremost. What did I see? Why did I take a NAS long here, etc. So as per usual, I always start off on the daily time frame, and on the daily time frame, I'm looking to identify two major aspects. I'm looking for market structure and market sentiment. Now, typically speaking, I want both market structure and sentiment to be in line for the day. So I want market structure to be bullish. Now, I define market structure as looking at the past 2 weeks of price action and just using context of the wider market to understand what is happening. Now, based off of the past 2 weeks of price action, what I kind of saw is that we were accumulating around this key level. Price was kind of failing to break higher. And right here, we had an attempted break higher that didn't quite manage to break above. But technically speaking, if you're looking at candlestick bodies, which you should be looking at in my opinion, this bullish candle body actually closed above the previous point of structure. So you see these two highs, this body is actually higher than the previous two. So technically that is actually the creation of a higher high in terms of market structure. So that would be classed as bullish market structure. Now, when you combine that with the fact that overall on the indices we've been incredibly bullish for a decent while now, it just made sense to be looking for buys. Now, current market sentiment, when I open up my chart, obviously this candle today was bullish and it was all the way up here. So it looked like we had a little bit of depletion on the daily. Price was kind of failing to break lower. We were stalling out, failing to create any significant movement. So I anticipated that we're going to create higher structure and actually break the high right here. So that's why I was looking for a buy position at the start of this day. Granted, right now with the current daily candle and the way it's looking right now, if I had seen this at the time, I probably wouldn't have been looking for a buy because this looks a little bit dodgy. It looks like more like it's going to short. But at the time when the candle was up here, it made sense based on the current day's sentiment. Now, scaling into an hourly time frame, what I saw is, again, overall, we've kind of been in this little bit of an accumulation period. Price is kind of failing to move anywhere. But what I did see is we had this huge fair value gap, this imbalance, and price is kind of making its way back up. We kind of filled it out right here and then had a small little mini retracement, which would be a little point of structure, and we came back up and broke that previous structure. Now, bear in mind, at this point, all I'm using for my analysis is just simple price action, simple market structure. What do we do right here? Again, we came up, came down, created a little higher low, and then we broke that structure right here and created a higher high. Therefore, we're now in a little period within New York session of bullish market structure. Combine that with the higher time frame sentiment and the bias already had for the day, and it makes sense to be looking for buy positions. So cool. At this point, it's still pre-New York session. It's 10 o'clock. Still way too early for me to be trading. So I wait a little bit and I scale into a 15-minute time frame and just look a little bit more about intraday price action. Now, cool. Around here, what I spot is a key level being created. We have a high right here. We have a high right here. A little area of buy side liquidity just above these two like little wicks. Price comes up and we wipe that out. We take out all this buy side liquidity and then we start this small little retracement back down to previous structure. You can consider this an order block. You can consider it a fair value fill. It depends how you want to flip it, how you want to look at it. But in terms of how I trade and my personal philosophy, this is just a super common piece of price action that happens all the time on the indices. Price action loves to create these big bullish impulsive movements like pre-New York session. It loves to do that and then has this small counter trend corrective back towards previous structure. And then you anticipate the big breakout for the New York Open. That's exactly what I was looking for. Now, if you've been following me on my channel for a while, you know that I have one specific setup in my trading strategy called the 3-pin breakout, the 3-pin formation. It's a very common occurrence. It happens all the time when the indices. It's super high probability, and that's where the majority of my profits actually come from, this exact setup. And that's exactly what I saw here on a 5-minute. So once again, we had this creation of structure around right here, which is where I drew my key level from. I could extend it further left, but it's sort of the same difference. We then had price break above with a decent amount of volume, so a strong impulsive break above. We then start this counter trend corrective back down. Now, if you're not paying a lot of attention, you might see this little movement right here as a break of structure back to the downside. And yes, technically we broke this little 5-minute structure, but overall, this was just a little manipulation, a little inducement of sellers to get people to short, when in actuality, we'll come into change character and head back to the upside. How do I know this? It simply just comes from experience after years in the market of looking at the same piece of price action, the same strategy, the same manipulation, the same movements. You just get a good idea of what price is doing. And this is where trading kind of shifts more to a discretionary sort of trading style instead of mechanical, because I can't 100% explain it to you how I saw the movement as it was playing out. but I just see it because I've been doing it for a very long while, and that's the subconscious element of trading a little bit. But to break it down a little bit further, we have this counter trend corrective back down towards the previous low. This previous low never actually gets broken, or on this little movement, it doesn't actually get broken. We then have a retest of the key level, which looks like we're shorting. And then right here, which probably induced a lot of sellers to start shorting and taking like continuation sells. What do? Well, we go ahead and print this big bullish candle. Now, notice how the candle doesn't have any downside wick projections. We also don't have any upside wick projections. Now, what that means is that price opened up, and immediately as the candle opened up, it moved up. And it continued to move up until the very last second of the candle closure, and it closed at the highest possible point. That means there was a lot of certainty, a lot of volume, a lot of movement in that one candle, and price action knew exactly where it wanted to go. So to me, right here, this is a strong sentiment candle, and it kind of gives you a direction of where the market wants to move, and it shows you the current behavior in terms of where price wants to go, based off of the fact that there's no wicks, no rejections, any of that stuff. Now, if you also pay close attention, if I zoom in further, because it might be a little bit difficult to see, you also see that this body right here actually closed above the previous bodies. So technically, and again, it's a little bit difficult to see, a lot of people wouldn't have caught this, but technically what we had right here was a change of character, because price failed to create new structural lows. We failed to break this low here to the left. We wicked it. We then printed a strong sentiment bullish candle that closed above the previous structural high. Therefore, this movement right here would be your market structure shift slash change of character slash whatever it is that you want to call it. Now, combine that with all the analytics and combine it with the fact that we're still a little bit pre-New York session, and that the fact that I just know NasDaq's behavior, I know its characteristics. I was like, okay, cool. This is the breakout move. We're now going to come up. We're going to break this liquidity trend line. We're going to come take out structural highs. I go ahead and enter my trade. Stop loss just below structure, and I went for a 2.5R. The reason I went for a 2.5R is just given the size of the movement right here, it just made sense. This was a natural target for me. It would have actually been on the psychological level. So just round it off with some zeros, and I went ahead and took the trade. You can see price played out, and in around I don't know which button it is. Yeah, there it is. In around 55 minutes, just under an hour, it went ahead and hit full TP of 2.5 RR. Now, the reason I didn't go ahead and close out the trade at this current point is if you disregard these candles right here, at this current point, price was just in a straight bullish impulsive move. There was no retracement candles, no significant sign that price was fading to break higher. And on a higher time frame, I already anticipated that we're in a higher time frame uptrend, which means that overall price is headed to the upside as it is. So it just made sense for me to continue to hold my position and just ride out some more profits. Now, I knew that stock exchange was about to open up in about 5 minutes. Now, if you don't know about stock exchange, it happens every day at 1:30 p.m. UK time. And that's when obviously the stock market opens up and you have an increased amount of volume. You usually get a big ass candle and price tends to swipe liquidity in both directions. Now, given the context of this trade and given the current sentiment, I thought that the market open, or stock exchange open rather, was going to be to the upside. I thought we are going to get a big candle like this, but in my direction. So I decided to go ahead and move my stop loss to break even and just hold the position. Now, I knew when I done this, I knew it was a massive risk. I literally tell all of my students, you never want to hold for a stock exchange unless you're 100% comfortable and confident that price can come down at any moment and either wipe you out a break even or wipe out your stop loss. It's not uncommon for stock exchange to open up and wipe out your entire position within 1 5-minute candle. I knew this fully well, and I still decided to go ahead and take a calculated risk because I believe the higher time frame was good enough. So I was like, okay, cool. I'm happy with going ahead and risking my entire profits in order to make a potential huge gain. Now, in this sort of scenario, you can see price ended up opening up, and we just dumped to the downside literally within 5 minutes. All of my profits were gone. I was up 3,000 on my Alpha Capital Group account and up around 3,500 on my TFD account. So in total, I lost about 6.5K floating profit that I could have closed out at the time. Do I regret it? Absolutely not. I made the decision at the time. I stand by my decision. If I went back, I'd still do it again. I don't care. Even though I've seen price action, it was just the move I decided to make at the time, and I stand by it entirely. You never want to be in a position where you get SL and you're like, oh shit, I shouldn't have done that. Like, if you shouldn't have done it, you shouldn't have done it. You know what I'm saying? Like, you need to stand by your decisions, take complete and utter accountability, responsibility for your own actions, and just take that shit on the chin. You get what I'm saying? Now, even though the scenario right here wicked me out and I ended up holding a break even, this could have very easily printed this exact same candle to the upside. And best believe, if we had this amount of volume to the upside, the trade would have ended up like way up here, and I would have had like a 1 to 10. It would have been easily like a 10-15 grand profit. So the potential upside was there in terms of risk to reward ratio. It just made sense. I also want to point out right here on US30 at stock exchange, which is this candle right here, we actually ended up having that same bullish movement. So this was one of the rare occasions where NasDaq had a bearish movement, but US30 had a bullish movement for stock exchange, which happens from time to time. I'm not entirely sure the exact reasoning behind that. I'm not going to sit here and try act like I know everything, like it just the price moves however the price wants to move. But I'm just pointing this out to you guys to show you that this could have very easily also taken place on NasDaq, and that same position would have been an absolute banging trade. It would have made a stupid payout, but it just didn't play out in that sort of that sort of context. So it is what it is. Sorry, I'm getting messages left, right, and center right here in it, but yeah, that's pretty much it. I'm not going to sit here and waffle too much longer on this YouTube video. Just thought I'd share this trade with you and give you guys a little bit of psychology, a little bit of insights into my positioning and why I done what I done. And yeah, just to show you that it happens, innit? Like just because you see a big floating profit on my Instagram story doesn't mean I closed out the trade. That's why I always think it's funny whenever people show like floating profit and stuff like that. I'm like, okay, yeah, that's cool, but did you close the trade? Where's your TP at? Did you hold it? Did you get break even? Like, there's a lot more that goes into it, and a lot of people don't speak about how you can be floating and profit a huge amount and then hold a stop loss. Like, I could have very easily not posted this video, not posted on my Instagram story explaining what happened, not posted the break even candle, and just made it out like I made 6.5K profit. But that's just fake, and I'm not a fake trader. I'm real. This is real transparency. This is what actually happens. I took a calculated risk in this scenario. It didn't play out. It is what it is. I'm happy with my decision, and that's just a part of trading. But yeah, that's it for the video. Hopefully you guys enjoyed. Hopefully you gained some value, some knowledge from that, and I'll catch you guys in the next vid.